Welcome to Yahoo Finance Live. I'm Julie Hyman along with Josh Lipton. We're here at the New York Stock Exchange bringing you what you need to know as of 3 p.m. Big tech is on deck. Alphabet, Microsoft, and Snap all reporting earnings after the bell. All eyes will be on any major AI announcements, and we'll also get a look into the health of Alphabet's digital ad business. Snap investors, meantime, are hoping the results will show the company is moving out of its rough patch. We're going to break down all the numbers and bring you in-depth analysis from market insiders.
And big moves in crypto. Bitcoin extending gains now, posting its largest single-day jump in 13 months. The move higher comes amid optimism of a regulatory approval for a long-awaited spot Bitcoin ETF. Going to break down the action with the CEO of Swan Bitcoin.
And Facebook facing new legal action. A group of 42 attorneys general suing Meta, alleging its platforms are harmful and addictive for kids. The lawsuit alleges Meta has ignored the damages that platforms like Facebook and Instagram have caused to the mental and physical health of young people. Let's get you up to speed on the market action right now. We've got all three major averages in the green, helped in part by the earnings that we have gotten thus far here, and also some continued relief on the yield front. If you look at the groups on the move in the S&P 500, energy is in the red here, along with oil prices, but we've got everything else in the green, and you can see there what's going on with yields. Not going down necessarily across the board, but not seeing much upward movement either. So a little bit of relief in markets for the moment.
Touch of relief.
Yes.
All right, well, we are an hour away now from the closing bell and the earnings Wall Street has been waiting for. Big tech. We're going to be hearing from two of those magnificent seven, Alphabet and Microsoft. We're also keeping an eye out for Snap as well. So this is it, Julie. Earnings on deck, big tech, Alphabet and Microsoft. Now, of course, bulls have been in charge when it comes to these names, right? They're running into this print. Alphabet up about 60% so far this year. Microsoft up nearly 40%. And of course, one story about the market this year has been it has been pulled higher by a fairly narrow group of names. And when you think about those names, we're talking about big tech. And a lot of the strategists and investors we've been talking to, at least the more bullish ones, some of them were waiting for this moment. They were waiting for earnings season. They were waiting for big tech because they're really betting that these companies, they were going to report and say, you know what? Business is going okay. For guidance, I think everyone sort of expects, given what's going on in the world, they're going to stay cautious. But generally, we did hear a lot of bulls saying this was the moment they wanted. They thought this could be a real catalyst to move this market higher.
You know, we've talked a lot about how important these names are for the major averages, how heavily they have weighted in the gains that we've seen this year. Just was looking at some additional stats on that front, right? If you look at last quarter, according to Bloomberg, the mega caps, the four, that is Meta, Amazon, Microsoft, Alphabet, accounted for about 15% of the earnings of all of the S&P 500. And they're also expected to show profit growth that is much higher than the rest of the S&P last quarter, which again speaks to your point of how much is sort of riding on these numbers. Let's just talk briefly about the individual ones here and what exactly we're looking for sort of on the big picture here. In terms of Alphabet, I think we're going to look for a read on the ad recovery, right, which has been a couple quarters now of a little bit of a recovery in the ad sales business. Cloud growth is going to be important for them as well as for Microsoft, of course. Expense control, some more details on that. And what are they getting out of AI? It's so interesting to have seen the narrative that Alphabet was a little bit of an also-ran behind Microsoft. So now what are they doing? What's going to happen with these AI tools?
Yeah, and for Microsoft, equally interesting. I think you're right. For Alphabet, it's just a great, big, direct read on the healthy online ad market. For Microsoft, very interested in Azure. Very interested to your point there as well. AI, a big part of the story. The big time, effort, and money Satya Nadella has been putting into that technology. And of course, Activision too. They made that deal. I'll be very interested. We have some great guests coming up to ask them what they make of that deal, because that means strong IP content. That means you're now a big player in mobile games with portfolio companies like Candy Crush. So what it means for their gaming business, I'm really excited to hear about as well.
Yeah, and just quickly on the AI front there, they have integrated a lot of these AI features in stuff that's available for consumers and for businesses in terms of Windows functionality. So what will we hear from Microsoft in terms of, has that actually helped them? Have they gotten more revenue as a result of these tools? That's going to be really interesting as we move into, I think we can argue, the next phase of AI and sort of that getting the money out of it, the
Yeah,
monetization.
no, I think you're right. I mean, Microsoft executives, when they've talked about the financial impact, they've said, listen, in some ways they've thrown some guardrails up and said it's going to be gradual. But I think your point is very well taken. When you're putting this kind of time and money into these technologies, I think the street and investors do want to get a sense of, okay, when does that actually translate into fresh revenue for the company?
And then we've got Snap, right? I mean, Alphabet and Microsoft are the biggies, obviously. Snap is interesting, in part because it has not done great, especially when you look at its last few earnings reports. The company has seen double-digit declines following its last 5 earnings, right? Some of that has to do with it not capturing the ad market that perhaps it used to. Some of it has to do with not seeing the kind of growth in users that it once did and that the street once ascribed to it. So that's going to be a really interesting one as well, and likely will move the most. To the point here, the options market is pricing in a 19% move in the shares.
Yeah, a couple key points there. One is, some of the challenges Snap has. They had to retool here to deal with Apple's privacy changes, so that's part of what's going on. But to your point, there's some interesting threads here as well. One is, I'm going to be interested talking to analysts about this company's moves in AR. They've always been kind of front on that. Of course, Meta's in there, Apple's in there. What kind of traction are they seeing, and how excited should investors be about that?
Right, and they pulled back on a little bit of some of that stuff too. So really interesting to see what's going to happen on all of this.
Yep.
But guess what? We've already heard from a lot of companies. So let's move on and talk about some of the companies that have already reported, because it's been a very busy day for earnings already. We are watching some key industrial names, in particular General Electric and 3M. Both of those companies beating estimates and raising guidance. GE getting an extra boost as it announced it is spinning out the aerospace business. That'll be the remaining piece of GE, right? Vernova is going to leave the company as of, they're targeting the second quarter of next year. Their 3M also sort of lapping some legal costs that it had in the past and trying to push past that. And the CEO of that company, of 3M, talking about momentum through strong operational execution.
Yeah, a couple of interesting. One is GE's having a nice pop today, but it's been a nice year. If you've been in GE, that stock has roared more than 70%. But I think part of the story, listen, raised its forecast for profit and free cash flow. Investors love hearing that. That's always a good one. Big story here, though, too, is more air travel means good news for its aerospace business, right? And, of course, GE makes those jet engines, makes the power generation equipment. Citi telling their clients GE is well-positioned for continued healthy results, and investors clearly like what they saw here today.
Yeah, and conversely, when it comes to 3M, that company focusing on cutting costs, and those shares have gone down this year, unlike GE. So a little bit of a relief, perhaps, today from those numbers.
Exactly. Not great, but enough to beat, and that's saying the shares higher.
Yeah, exactly.
All right, let's also check out shares of another mover here, RTX, formerly known as Raytheon, defense giant, reporting better than expected results. And the news, Wall Street is really liking a $10 billion, that's with a B, dollar share buyback. So this one also an interesting mover today. So profit beats, Julie. Company announced that big buyback. Company, remember, did announce I guess these engine flaws over the summer, if you remember that headline. And the jet engines need inspections for possibly, I guess, problematic components. That was going to impact Airbus. But the CEO saying that the expected financial impact is going to be in line with the previous disclosed range. In other words, no new news. And I think that's part of what you're seeing today.
Right, yes. He had talked about a charge that the company was going to take $5.4 billion in a pre-tax charge because of those Pratt & Whitney engine flaws. So as you say, that being in line with estimates. The company's Raytheon unit, it still has a unit that I guess is called Raytheon, which is Missiles, Defense, and Space. There it had 3% sales growth here. And the company's Collins Aerospace had sales growth of 17%. So it did have some areas where it did see some strength there. But, you know, sort of like 3M, there was a bit of an overhang situation in this case from those engines, those Pratt & Whitney engines. And then let's round out sort of the biggies that we were watching today. Another Dow component that we've been keeping an eye on is Verizon. The stock on track for its best day since October of 2008. And that's after the telecom giant reported better than expected results. So I think when we look at these companies we've been talking about, if there's a through line here, it's sort of legacy companies, right? And, you know, maybe relief being expressed in a number of different ways for these companies. In the case of Verizon, what we've seen from it and from AT&T is better than expected growth, or at least smaller than expected losses, depending on the types of customers that we're talking about here. The company added 100,000 mobile phone subscribers, which is better than estimated, although a lot of those gains were business customers, interestingly enough.
So it's a night. I mean, listen, that's a big move on today, but for year to date, it's been tough. I mean, that stock is still well in the red. Q3 earnings beat. They also raised guidance for the year, looking for free cash flow now. It looks like above 18 billion. But as you said, added net 100,000 mobile phone subscribers. That was led by business. I did hear some folks saying, though, that perhaps implies Verizon is no longer at least shedding market share. That's how they interpreted it, and I think maybe that's how investors are seeing it too.
Yeah, a couple of other quick notes. The company has been raising prices, right? There was sort of a race to the bottom in terms of the phone carriers offering discounts. That seems to have reversed, at least in part, with these companies raising prices. And remember, also, Verizon spent a lot on its 5G build-out, and that didn't necessarily bear fruit, although maybe there's some early signs of that at this point with those subscriber gains. We'll see.
Investors likely to see at least today.
Yeah.
All right, moving on. J.P. Morgan Chase CEO Jamie Dimon is slamming central banks today at an event in Saudi Arabia. He warned of the dangers of making forecasts on the economy, saying the Fed was, quote, 100% dead wrong 18 months ago. This comes as the next Fed decision is just over a week away now. Joining us is Tim Urbanowitz, that's head of research investment strategy at Innovator Capital Management. So, Tim, thank you so much for joining us.
Good to be with you, Josh.
So Tim, let me start with Mr. Dimon's comments, because one thing that I thought was interesting at this speech, Tim, is he seemed to just dismiss the impact of more rate hikes. Tim, at this conference, he said, I don't think it makes a piece of difference whether rates go up 25 basis points or more. When you heard that, Tim, do you agree with Jamie Dimon there?
Yeah, I think he's spot on. And really what we've been saying for a long time now is less important than another 50 or 25 basis point hikes is really how long interest rates are going to need to stay at these restrictive levels. Because the reality of it is the longer that we stay where we're at right now, the more damage that we're going to see play out in the economy. We have to remember that interest rates hikes, their impact is lagged on the economy, and right now we're kind of in that waiting ground where we really start to assess, okay, what type of damage has already been dealt. And I think there's a very strong case right now that interest rates are restrictive. And even if you look at just the backup that we've seen in longer dated yields, we have the 10-year keeps flirting with 5%. Yeah, you'd have mortgage rates that are right around 8%. That's certainly going to really hamstring home buyers and consumers alike. So really now we're at this point where we need to wait and see what the damage looks like with those hikes. But I think he's exactly right in that, it's really about how long rates stay at this level.
Do you think that, however long rates stay at this level, do you think that in the bond market and the Treasury market, that yields have sort of topped out as around 5% the ceiling, do you think?
Well, I think it really depends on what the Fed does. If you look at some of our research that we've put out recently on this, we tend to see that longer term rates like the 10-year Treasury typically peak within a month or so when the Fed finishes that hiking cycle. So we think there's a very strong case to be made that you either saw the last hike or you're going to see the last hike here this month. So we would anticipate that we're kind of coming to the end of longer term interest rates moving higher. With that, I will say that I think the situation in Israel right now does put a little bit of a caveat to that. If we see that situation spread out, you start to see other countries get involved like Iran, where you start to see a big impact on energy prices, oil prices moving higher. The reality of it is that's inflationary in nature. And if we see that, that might really limit what the Fed can do and even may force them to take rates even higher to combat any of those forces. In 1973, in particular, when you saw that situation playing out, you had the Fed that actually had to hike in the middle of a recession. So we don't want to see a situation like that play out, and that certainly remains a threat to that view.
And Tim, I want to switch gears a bit. We got big tech earnings after the bell, Microsoft, Alphabet. I was talking to Julie, Tim. We've had guests come on, at least more bullish ones, and they were really pinning their hopes on this earnings season. They really thought, listen, this could be a catalyst to move this market higher. What are you expecting to hear from big tech, Tim?
Well, I think the entire index is counting on these names to really lift us out of this earnings recession that we've been in. There's a lot of good news priced in, so we need to see these companies deliver. But at the end of the day, I think we need to back up and remember that right now we're really in a macro-driven market where a lot of the news that you're going to see coming out is going to take a backseat to a lot of the economic data, inflation data, the data coming out of the labor market, because the reality of it is what we have seen historically is that interest rate hikes impact earnings with about a 2-year lag, which means we're really starting to get into that cycle now where you start to see that impact. And one of the things that we have looked at is really when do earnings bottom? And very consistently, one thing that we have noticed is that earnings never have bottomed before the Fed finishes its hike cycle. In fact, they typically bottom out anywhere from 13 to 38 months after the Fed is done. So regardless of what we see right now, again, we're in a macro-driven market, and it's really about what's going to be coming through the pipeline next year.
So you don't think then, Tim, that tech earnings are going to sort of dominate here and help pull the market up? And by the way, for all the talk of high yields being problematic for big tech, most of these stocks have done well this year.
Yeah, they've done very well. They have very strong cash flows, which is very encouraging overall. But again, reality is it's going to be more about guidance than it is results. So that's what we need to focus on. And again, if we see the impact that we've seen historically, we don't know what that looks like yet. So we're coming to the point where that's going to be the case here very soon.
And Tim, we've hit a lot of topics today, but I want to end here with more headlines from Congress. They keep coming. Now we learned that Republicans narrowly chose House Majority Whip Tom Emmer as their nominee for Speaker. How worried, if at all, Tim, do you think investors need to be about this continuing drama in Washington, especially as we get closer and closer to this potential government shutdown?
Yeah, I think it's an issue we've been really looking at all year, and really a big question comes down to where are interest rates going to. I think if you looked at the debt ceiling scare earlier in the year, there was a lot of question marks of, is the debt still reliable? Is it still creditworthy? Is that still the same? And seeing these continued issues is certainly concerning. What's also concerning, however, is if you look at the imbalance in the budget that we've seen. We just wrapped up the fiscal year with about a $1.7 trillion deficit. That's very, very significant. There's a lot of bonds that need to be issued, to meet those spending needs. And this is coming at a time where the Fed is stepping back. We have foreign investors that are stepping back. So in addition to the Fed holding rates higher for longer, in our view, a lot of this drama really points to really a floor under interest rates, as well as that supply and demand is a little bit out of balance.
Tim Urbanowitz, thank you so much for joining us. Really appreciate it.
Great to be with you.
We're just getting started here on Yahoo Finance Live. Coming up, crypto's big moves. Bitcoin extending its gains, hitting its largest single-day jump in 13 months around optimism for approval of a Bitcoin spot ETF. We're going to talk about that. Also, spooky stocks. Shares of Vinfast are down around 75% since its public debut on the Nasdaq. What's the reason behind the massive drop? That's coming up. And big tech on deck. We'll bring you earnings reports from Alphabet, Microsoft, and Snap after the bell. All that and more when Yahoo Finance comes back. Bitcoin extending gains, having its largest single-day jump in 13 months and exceeding 35,000 really for the first time since May of 2022, although it's come back down below that level. The move higher overall comes amid optimism for regulatory approval for a long-awaited Bitcoin spot ETF. Any of the many applications that are out there. Here with more on the enthusiasm in the crypto space right now and where it's headed is Swan Bitcoin CEO Corey Klippstein. Corey, thanks so much for being here. And, we have been talking about sort of the dynamics at play here behind this latest move, and that, yes, there is some enthusiasm fundamentally, but maybe there's also some short covering. Can you talk to us about the dynamics at work here?
Yeah, there's definitely a bit of both. There were quite a few players that got caught offsides with, having sold calls or being short gamma and things like that. So I've been seeing a lot of the rumors and analysis around some of those dynamics at play. But this happens over and over and over again. And obviously the root cause is occasionally Bitcoin moves up, and sometimes it moves up rather violently on news or expectations of news. And when a lot of traders are caught off sides, that tends to fuel these very fast price movements.
And Corey, there's a lot of enthusiasm from crypto fans about the SEC possibly approving a spot Bitcoin ETF. Bottom line, Corey, do you think the SEC is going to greenlight a spot Bitcoin ETF? And if so, Corey, when do you think they make that decision? Is that this year? Is it early next year? What do you think the timeline could be?
I do think it's pretty much an inevitability that it's going to happen, and that there'll be a batch of them at about the same time, and then they'll compete it out to see who becomes kind of, who's the Bitcoin version of the queues for S&P, for instance. So that's what they'll be spending into, these big companies with their listings. As far as timing, I have been handicapping it as, basically Q1, but it does seem like there is a smaller chance, obviously, of it happening sooner. I would place my bets on Q1, though.
And Corey, what effect, if and when these ETFs are approved? It's not as just that it creates the product and people invest in it, but one would have to think that these big firms are going to be trying to push clients into these products. I mean, what kind of effect do you expect?
That's right. Yeah, the biggest effect of the ETFs is going to be that the top of funnel for the investor class is going to change from something that is contra Bitcoin, which is all of the, the crypto scams and pump and dumps of the last 6 years, FTX and the like, and all these wannabe altcoins. That's generally what has gotten people into Bitcoin, because they've been able to print their own money and sell it with marketing and all this VC funding. And then it takes people a year or two often to wade through all of that false marketing noise and find out what really is the signal in the space, which is Bitcoin and Bitcoin only. And now you're going to see a new era where some of the most credible, some of the most well-funded, some of the most trusted brands in the world are going to be shouting from the rooftops with tens and maybe hundreds of millions of dollars of marketing expense, just talking about Bitcoin, and putting all of the Bitcoin authors and podcasters and executives out there at conferences and encouraging them to go speak on to their companies and to the investing public. And that top of funnel is going to be talking about Bitcoin, and that's going to get people through the early stages of their customer journey much, much, much faster toward understanding what Bitcoin is and how different Bitcoin is from the world of quote unquote crypto.
Well, Corey, by the same token, I mean, the SBF trial is still going on. Do you think that there will be sort of a public overhang from not just that, but some of the other frauds that there have been over the past couple of years, and that it's going to take some time to overcome some of that institutional and individual reluctance, perhaps linked to those incidents?
Yeah, absolutely. I mean, they had a dramatically negative effect on Bitcoin in the last bull market because they siphoned demand away with false promises, and frankly, just by stealing demand with fake yields and fake pump and dumps that were all sort of just Sam's fraud, essentially, allegedly, but probably certainly. So, I think that we'll see a very different dynamic play out, and it'll be fascinating because there have been so many people, myself included, that would assume that the percentage rises, sort of bull cycle to bull cycle would continue to diminish. But if we truly were chopped at the knees with the last Bitcoin bull market, which it certainly seems like we were, a lot of demand truly was siphoned away by these scams, and most of them are gone, or at least the investing public understands much better after having it drummed into their head the difference between Bitcoin and crypto scams over the last couple of years. There's a very good chance that we see, a pretty different looking bull market the next time it really gets in swing for Bitcoin.
And Corey, I want to get you out here on this. We had Coinbase CEO Brian Armstrong on Yahoo Finance recently talking to us about the market. And one point Armstrong made was he really feels like the U.S. is falling behind the rest of the world when it comes to just the regulatory front. I was just wondering if you agree with that, Corey, and if you think that's changing anytime soon.
Yeah, I don't agree with that at all. I think basically Brian wants to have his cake and eat it too. And I've said this many times before, he wants to have only his little corner of the financial universe to be regulated differently while continuing to allow multi-level marketing scams and Ponzi schemes, not be allowed, and penny stock operations with false promises and direct mail to your grandma's nursing home and all these kinds of things that are not allowed. And he wants that light not to be shined on his little corner. These are companies that create software and then market essentially a company performance linked token. It's nothing like Bitcoin, everything from Ethereum on down. None of them are anything close to the way that Bitcoin operates as a truly decentralized network with a fair launch. These are just companies with kind of a new version of equity linked trading instrument that sometimes has value of some sort that's linked to company revenue in some way, but usually doesn't. And so they're just kind of like these meme tokens that won't hold value in the long run. And so, yeah, I think they're being regulated according to the laws on the books, and they're fighting it out. And the grand plan of Andreessen Horowitz, Coinbase, and the Ethereum Foundation and Consensus and all these guys has been to try to achieve a degree of regulatory capture, whether it's pushing this over to the CFTC with promises of extra fees and budget for that agency instead of the SEC, or there are numerous plans to try to start a new agency, or, as has been the case for the last 6 to 12 months, writing legislation and handing it over to the legislative aides of some of the reps and the congressmen and the senators, and trying to get them to write legislation and be crypto mouthpieces, essentially. So I think they've kind of bought their way to having a voice in Congress now, and we'll see if they achieve their goal of, essentially not being regulated the same way as the rest of the financial industry. And then if they achieve that, we'll see what kind of knock-on effects that has for other areas with similarly shady practices in the rest of the financial industry, and whether they're able to follow suit and also get special favors.
All right, Corey. So I think the next time you come on, we got to pitch you against Brian Armstrong. I think that's a fight I want to see, Corey. Corey Clipston, thank you so much.
Yeah, we've been battling it out for years on Twitter, and happy to do it live anytime.
Let's do it. Let's set it up. Thank you, Corey.
My pleasure.
All right, Qualcomm out with a number of key AI announcements, including new chips, as the company faces off against other competitors in this chip race. They're here to discuss is Yahoo Finance's Ali Garfinkel and Dan Howley. Ali, let's start with you. What is the latest we got here from Qualcomm?
Josh, Qualcomm's coming out here swinging, really trying to make the case for itself as an AI play. Now, the approach they're taking is what they call on-device AI, AI that is meant to be more efficient on your devices, whether that's your smartphone or your laptop. And there are two new chips to this end that they have announced today. The first one is called the Qualcomm Orion CPU. Now, this is a chip specifically for PCs, and it is attached to what they're calling their Snapdragon X Elite compute platform. Now, the most important thing to know about the Orion is that Qualcomm's making some pretty impressive claims about it, some pretty hefty claims. What it's saying is that the processing power is faster than a lot of ARM-based competitors. That's a group that includes Google and TSMC, and that it hits the peak performance of chips from companies like Intel and Apple. So that's going to be something that you should be expecting them to see them really make a case about sooner rather than later, and it's something they're going to be talking about a lot. Now, the other chip they announced is called the Snapdragon 8 Gen 3. Now, this is a chip for smartphones, and it was built with generative AI in mind. The goal is actually that you can run large language models like ChatGPT or Meta's Llama 2 on your smartphone. Now, this is specifically for Android smartphones, and it's important to remember here that these chips, while they are AI chips in the sense that they are meant to work with AI, they are not the AI chips that we are talking about from NVIDIA. These are CPUs. NVIDIA's GPUs are what are being used to train AI models. So in the end, don't expect Qualcomm to come in and solve that massive chip shortage that we've all been talking about. But I will say that the success of these chips, I think, is going to be really key for Qualcomm's case as an AI play moving forward.
And Dan, let's bring you into this conversation, right? There's a lot going on in the world of semiconductors right now. We have these announcements from Qualcomm. There was a report yesterday that NVIDIA was looking at developing CPUs. Put it all together for us, and sort of paint the competitive landscape for us.
Yeah, so the idea here with the NVIDIA CPUs is that these would also be for PCs. They would be for Windows PCs competing alongside of these Qualcomm chips, as well as Intel chips and AMD chips. So really, this is opening up the landscape. Got to caveat the NVIDIA part with they didn't want to comment. This was a report from Reuters, but the landscape now is going to be infinitely more competitive for Intel. I think it's important to point out that unlike Apple, which has an ARM-based CPU and runs them as the M1, the M2, and the anticipated M3, Qualcomm, NVIDIA, they don't run the software that powers the PCs. That's Microsoft. Apple has the benefit of running the software, so they have soup to nuts control over the system. For NVIDIA and Qualcomm, it's going to be a little bit more difficult to perhaps truly catch up to what Intel and AMD are doing when it comes to overall performance. Now, the companies in case of Qualcomm cite overall performance compared to Intel chips, but it really comes down to when you get them into consumers' hands, do they match up? And Qualcomm has been in this space before. They had worked with Microsoft on a Surface device running a Qualcomm chip. So we just need to see if that actually equates to a big amount of power and a big amount of battery life. So that's really the key here, I think, overall is Apple managed to put out the M1, the M2, the M3. They can last a long time and have plenty of power. Can Qualcomm, can Intel, can AMD, can NVIDIA do that with a Windows PC? And that's going to be a big deal if they can.
And then can they gather a lot of revenue and market share from it eventually? We'll see what happens. You guys, thank you so much for putting this story in perspective for us, our Ali Garfinkel and Dan Halley. And we're going to continue this conversation, by the way. Be sure to tune in to Yahoo Finance tomorrow. We will be speaking with Qualcomm CEO and President Cristiano Amon. We don't want to miss that conversation. Coming up next, though, the UAW expanding its strike to a crucial GM plant in Texas. We'll get the latest details on that and the company's earnings. The S&P 500 hovering near a key technical level. It's the 200-day moving average, and that's where you find Jared Blickery as well, hovering on the floor of the New York Stock Exchange with a look at what this could mean for the market's next move. Hey, Jared.
A confluence of several of my favorite things, standing here on the floor with you guys and also talking about technicals. All right, let's go to the Wi-Fi Interactive. I'm looking at a 2-month chart of the S&P 500 with the 200-day moving average on it. Now, the 200-day moving average is just an average of the prior 200 trading days prices. And one thing that sticks out here is we are back above, but 2 days ago we closed below, and then just barely, and then closed below it yesterday as well. Now, I want to show you a 2-year chart, a longer-term chart, and just show you how the 200-day tends to capture the dominant trends in the market. So we peaked at the beginning of 2022. You can't even see it right there. Then we headed down, and you can see the 200-day was a little bit slow, but eventually got caught going the right direction. And then after we inflected up after the October lows, eventually it started trending up. And what we notice here is that the slope of the moving average is moving up right now. That's important as well. Now, I went to and calculated some stats, and let me just show you what happens historically when the S&P 500 cuts under its 200-day moving average when it is positively sloped. Actually, over the next week or two, the average says we could have some negative price action. While the median is positive, the percent positive is only about 60%. Anything less than a 70 when we're talking about stocks, which usually go up, I'm going to discount that. So I'm going to say this is a little bit negative in terms of projecting price action over the next week to two. Once you get a month out, yeah, we're still at 63%, but at least the average and the median both turn positive. And then going out a quarter and a year, we're back over 70%. Now, I went through and highlighted some other historical incidents when we had this drop below the 200-day, when it was sloping upwards. This goes back to 2017, so basically 5.5, 6 years. And you can see some of these caught price action just really nicely as the market was about to inflect. This happened, the one that I'm circling here, by SVB. That was the internet banking panic earlier this year. The market had already come well off of its lows and was testing that, and it acted as a support. But there are several other times in history when the market just crashed through it. We'll have to see what happens this time around. But as I said, going out the next week or two, I'm going to be a little bit, I guess, suspicious of any bullish action, guys.
Jared Blickery with the big technical take. Jared, thank you. So now General Motors, check these shares out. They are under pressure in today's trade, and that is a double whammy for the company. Automaker reporting a third quarter earnings beat, but pulling its guidance over uncertainty tied to the UAW strike. And the union expanding its strike against GM. Union now targeting a Texas SUV plant. Joining us now is CFRA analyst Garrett Nelson and Greg Migliori, editor-in-chief of Autoblog, a Yahoo company. So, Greg, let me start with you right here. I'm just interested to get your take on the report, what you made of what GM had to say, and also just whether you think investors are even focused on this report. Or are they more focused on, listen, when there is a UAW deal, they're wondering about what are the labor expenses going to look like for GM and what it's going to mean for their bottom line?
Yeah, hey guys, thanks for having me. And I think really the headline here, the takeaway is that the strike has cost General Motors $800 million so far. This has gone on longer than the last strike in 2019 without a tentative agreement. I think really what we're seeing is some uncertainty with investors and really all industry watchers as far as what is going to happen next with General Motors. The UAW president, Sean Fain, is not playing around the edges. He's going, right at the Detroit 3 with strikes at big factories. The one most recently this morning, Arlington, they make the Cadillac Escalade, the Chevy Suburban, the large GMC trucks, truck-based SUVs. They're going right at the heart of the Detroit 3.
Yeah, they definitely are. And Garrett, when we talk about General Motors in particular here, I mean, I know it's hard to predict what's going to happen, but what's going to happen? Are they, what is it going to take to get to an agreement here?
Sure. Well, the two sides have come a lot closer in recent weeks. We are on day 40 of the strike. Everyone's asking, when is this going to end? We think probably in the next 1 to 3 weeks they'll come to an agreement. But what you're seeing more recently is the UAW walking out at the really high margin plants of the Detroit 3. So you saw, very large Ford factory in Louisville a couple weeks ago. You saw Stellantis Ram 1500 pickup factory in Michigan yesterday, and then today GM's Arlington, Texas plant, which employs about 5,000 workers. So what we make of this is that the UAW is now really going after the high margin operations. They want to show the union members that they've done everything possible to drive the best labor deal before reaching an agreement, because they want a very high ratification total by the membership of any deal that they reach.
And Greg, the issues we talk about a lot here, I mean, yes, it's wages, it's cost of living adjustments, it's also these battery plants, Greg, and whether the workers there are going to be unionized. It sounds like GM made a concession there. Do you think Ford and Stellantis will make similar concessions on that issue?
I think at this point they're going to have to. With General Motors making that concession about a week ago, I think that really sort of paved the way for the other two Detroit companies to try to come to an agreement there. They still seem to be pretty far apart with retirement, 401k. It sounds like they've ironed out some things with like the wage tiers. That's definitely, had been a point of consternation. And then right now it's been a little, frankly, confusing which company seems to be perhaps in the lead position. For a while, it seemed like Ford might be at a better spot. Right now, Stellantis seems to be sort of in the pressure cooker with, what the UAW is going for. So it's become very uncertain as to like which company might sort of lead the pack out of this at this point.
And Greg, remind us here, even after the strike concludes, what's the then re-ramp up time? Like, do people just go back to the line and that's it? They start cranking out cars just like that once again?
I mean, essentially, when the strike ends, and at some point it will end, and there will be a ratification process as well. The workers will return. There will be a little bit of a ramp up time, but I wouldn't expect it to be too long for these specific factories, because these factories all are building established products, very important products too. You're talking about some of the most lucrative, profit-driving, vehicles that the Detroit Three make. But they're not like brand new products, if you will. Like they know how to make the F-150 and the Cadillac Escalade, but they will need some time to get these churning out and replenishing inventories, getting these to dealer lots. A lot of dominoes do need to kind of tip over before the Detroit companies are back at full strength.
Yeah, and Garrett, so let's put aside the strike for a moment, which I know is very difficult to do. How is GM doing otherwise, right? The company seemed to make some indications today in its commentary around earnings that it was on pace to hit the high end of its guidance if you take out strike costs. So what's your assessment of just broadly how GM is doing if you exclude the strike effects?
Sure. Well, it was a much better than expected quarter. And a big reason for that is, of course, the strike didn't begin until the second half of September. And because of the targeted nature of the strikes, really just a handful of factories. So it really has had a limited impact on GM's earnings in the third quarter. But looking ahead to the fourth quarter, there's a whole lot more uncertainty, of course, especially with the Arlington, Texas strike walkout this morning. And so that's why they've withdrawn their guidance for the full year. But still, if you look at the strikes, only about 31% of the UAW's membership is now on strike. So we would expect, when Ford and Stellantis report earnings, that there was also a fairly limited impact on their earnings for the quarter. But we would also expect those companies probably to withdraw their guidance for the full year, just given the uncertainty.
Yeah, makes sense. Garrett Nelson, Greg Miglioרי, thanks, guys. Appreciate it.
Thank you.
Coming up, our second edition of Spooky Stocks. You're supposed to go woo now.
I was waiting for the music to kick in.
We'll break down the volatile moves of Vietnamese EV maker Vinfast and explain if you should add it to your portfolio. That's next.
A week ahead of Halloween, we are looking at stocks that have spooked investors of late. And today we're going to be looking at Vietnamese EV maker Vinfast. Yahoo Finance's Praz Sumarain is here with the details. Praz.
How's it going, man? So, yeah, shares of Vinfast have sort of fallen a whopping 75% since its reverse SPAC merger with that Black Spade company now. But it didn't always start that way. The stock closed its first trading day a little over $10 a share, and within 2 weeks was up more than 680%. At one point, the company's valuation was higher than even Ford and GM's. But it didn't take long for the frenzy to die down, the stock now trading around half of its original value. So what happened here? Only around 1% of VinFast's shares are actually available for trading. That means small stock trades can sort of amplify into big moves. Some are even calling VinFast a meme stock because of the wild action in trading. And as investors exercise some of these warrants that give them the right to buy even more shares at a fixed price, that puts more shares in the market, adding to the volatility. And VinFast itself is not yet profitable as a company. EV maker says it will deliver around 50 to 40,000 vehicles this year, but it had just over 11,000 in the first half of the year. And in the US specifically, VinFast faces a number of challenges, including competition. VinFast vehicles aren't priced to compete yet at this level. They're not eligible for the EV tax credit either. And early reviews have been far from good. So shares are reaching new lows after the company announced that it aims to raise $1 billion in cash to fund expansion plans. So this story is sort of evolving this spooky stock story here with VinFast.
Yeah, that is a spooky chart indeed. Thanks for walking us through what's happened there with VinFast, Pras. Appreciate it. So let's talk more about VinFast and a possible investment case. Are you brave enough to step in there? Brian Dobson is joining us now, Chart and Managing Director. Brian, thank you so much for being here. You heard some of the elements that Pras just laid out. And setting aside sort of the technical factors and the small float for just a minute, to talk about the cars themselves. As he mentioned, they've not gotten great reviews. Is this product sort of ready for prime time here? Is there a demand for it?
Yeah, the product received a disappointing slate of reviews upon initial introduction to the United States automotive press. We've spoken with management at great length since then, and they've assured us that they've made appropriate corrections to the vehicles, which should be completed by the end of this month. I think that the next, perhaps, catalyst for the stock is the reintroduction of the vehicle after the suspension and steering have been retuned to have it re-reviewed by those same journalists. I myself am excited to test drive the new vehicle early next month.
Yeah, Brian, I was going to ask you, have you had a chance to get behind the wheel of one of these?
Not yet, but I've read the reviews at depth, and there are some extremely cautionary tones that kind of run throughout all of them. Now, I brought those up to management, and it was refreshing because they didn't say, hey, these guys don't understand the car, or we got a bad story, or it was a bum rap. Instead, they said, yes, we took those to heart. We think 80% of them are software related, 20% of them are hardware related, and they should be fixed by the end of October. Certainly the proof is in the pudding, and I look forward to putting that car through its paces in a few weeks.
And Brian, when you look at that car, what do you think some of the competitive advantages are? Is it price? Are there certain features that make them stand out?
Yeah, so I think what VinFast is trying to do is a go-to-market strategy that's been successful for Japanese and Korean OEMs as they enter the US market. And that is to provide a little bit more at a competitive price point. Certainly we've seen several price breaks within the EV sector. VinFast has not adjusted its price point. That might be something management is considering. But from its statements, it looks to bring something to market that will be competitively priced and offer a variety of features that are not available at comparable price points.
So there's the sort of fundamental case around the cars. Let's talk a little bit now about the sort of technical factors here, that there just aren't a lot of shares out there, and that's one of the things that has really whipsawed the publicly traded stock. Are you hearing anything from the company that's going to change? Are you satisfied with that kind of structure?
We've spoken with management at length regarding the extraordinarily limited float. It is our chief concern, and it's what's keeping, I think, institutions away from the shares because there's simply not enough liquidity to get involved in a meaningful way. I think management's aware of this. I think that over time, they'll work on a way to have additional non-dilutive equity offerings in order to bolster that float. It will simply take time.
And Brian, taking a step back and you look at the overall EV market, how confident are you in demand for EVs, Brian? Or is there a risk that we may be overstating it? I ask that because we've had cardios come on Yahoo Finance, Brian. They'll tell us what still sells are the gas-powered trucks and SUVs, not the EVs. I look at Tesla, and I've always wondered if demand is so strong, why Elon Musk has to cut prices. You don't see Tim Cook cutting prices of his iPhones, right? Or do you think I'm misreading these cues?
I think you're reading the EV market correctly for the short term. And what I believe Tesla is doing is taking significant price action in order to protect its incredible market share of EVs, which is over 60%. However, if you're looking at the transition to electric vehicles, or rather the broader electrification of transportation, I think we're still at the very early stages there. And this change in consumer preference and technology is very reminiscent of the United States auto market in the 1970s, when the oil crisis brought about a new focus on fuel efficiency that allowed new market entrants to reset market share. And I think that's what's going to happen here with electric vehicles, and certainly opens up the United States and other established markets to new players.
I want to switch gears for just a moment and ask you about another company that you cover because it was very much in the news yesterday. I'm talking about Li-Cycle, if I'm saying it right, or Li-Cycle, Li-Cycle, which said it was pausing construction on its plant in Rochester to build batteries. This is a plant that had been supported by the Biden administration. What do you make of not just that, but the push for this U.S.-based industry in general?
Well, I think the onshoring of battery manufacturing and recycling is important within the broader context of the electrification of transportation. As far as Li-Cycle goes, it has put a pause on the construction of its Rochester refining hub and is undergoing strategic review. But yesterday's sell-off, 46%, would imply that there's something meaningfully flawed with the way that the company plans on recycling batteries. I do not believe that that's the case. I think that they'll come out of this strategic review. They'll likely have a longer timetable for the construction of that facility, and it will be at a greater expense. But I think that they will be able to recycle batteries in the way that they've projected to the market. And I also think that it will continue to enjoy support in Washington, and that its DOE loan is likely to come to.
Brian Dobson, thank you so much for joining us today, Brian, for that time and for that insight.
Thank you very much.
And coming up, the closing bell on Wall Street. We're going to be checking in on the latest market moves and the top trending tickers. Stay tuned. Closing bell on Wall Street. Let's do a quick check of the markets. It looks like we're going to end the day in the green here across the board. Check out the Dow up about 0.6%. The S&P 500, that tacks on about 0.7%. And the Nasdaq up about 0.9%. So all the major averages moving higher in today's trade. If you pop open the hood of the S&P 500 and see what really worked today, utilities led the charge. So a defensive move there. And in a laggard bottom, number 11, that would be energy, dipping about 1.3%. Of course, we've got some big earnings on deck, including Microsoft, on Alphabet. As we've heard from different bullish investors and strategists who've been coming on Yahoo Finance, this is what they were focused on, big tech earnings, and their hope that these companies would come out, sound the all clear on their businesses, give some perhaps cautiously optimistic take on the future, and that would provide a catalyst to move the market higher, Julie.
Indeed, and just to refresh what we're waiting for here, waiting for Alphabet to come out with its numbers. $63.04 billion is what we're looking for in terms of the ex-TAC number, that so-called ex-traffic acquisition cost. So that's what we're waiting for, and waiting for continued signs of an ad recovery for Alphabet. We're going to be watching the YouTube revenue quite closely for that as well. Also going to be looking for any kind of news on a permanent replacement for Ruth Porat in the CFO role. Specifically, remember, she is transitioning to being president and chief investment officer, giving up the CFO role. So we'll be looking for anything regarding that. We're going to toss it down to Jared Blickby now for a little bit more of a look to the action today. Jared.
Hello, let's get a read on the Wi-Fi Interactive for the close. And in fact, I'm looking at a map around the world. You can see the U.S. all in green here. Nice to see that, because hasn't been the case always over the last few weeks. When I check inside the market, and here's a look at the S&P 500 sectors, everything but energy in the red. We've had a lot of crude oil volatility lately. It's either been leading or lagging. Today, the energy sector is definitely lagging. In the top spot is utilities, very interest rate sensitive. Always interesting to see when that is number one. Also interest rate sensitive is real estate. That's up over 1%. Then you got materials, that's XLB, communication services, consumer discretionary, and consumer staples. That rounds out the top line there. And let's check in on the Nasdaq 100, get a preview of some of these issues. Now, we're going to get some big movements from Microsoft and Alphabet in a little bit. Just a couple minutes, but Microsoft right now, it closed the day up about 1/3%. Alphabet up 1.7%. Nvidia and Amazon just a tad lower than that. Really big week for all of these earnings. Just looking at some of the outliers here, Pinduoduo up the biggest. That is up 4%. Well, actually, Packer up 4.26%. Interesting day there. Now, for the flip side, here's what it looks like in the energy sector, the only red sector of the day. Schlumberger, which reported earlier, that's down 3%. That's that dark red in the upper spot. Halliburton, also in the oil field business, that's down 3.4%. And then Hess, after that merger announcement, down about 3.8%. Now taking a look at the banking sector, mixed results there. Barclays Bank down 7%. Huge loss there for Barclays, but for the most part, a mixed board on the financials. Guys.
All right, Jared, thank you very much. Appreciate it. And we're getting to those earnings now. Let's start with Microsoft here. Microsoft coming out with revenue of $56.52 billion. That is above the $54.54 billion that analysts on average had estimated. You can see the shares popping and after hours trading in reaction to this first blush look. Earnings per share beating by 33 cents, as you can see there. Cloud revenue specifically, and of course that is an area of focus for investors when it comes to Microsoft, at $31.8 billion. That's versus around the $31.2 billion that analysts had been anticipating. And it looks like if you look across the other business lines here too, we have beating estimates, whether it comes to its personal computing revenue at $13.7 billion, intelligent cloud revenue at about $24.26 billion, or productivity revenue at $18.59 billion. All of those appearing to beat analysts' estimates here. As we were talking about ahead of the numbers, Josh, really there was this looking for how are the AI tools showing up? That was one of our questions, right? One of our questions, how is Activision going to be integrated? So I know you're looking through the release. What stands out to you at first blush?
Yeah, so first of all, impressive that Microsoft, which was up about 40% year today, is popping like this in the after hours. Of course, we always want to hear from CFO Amy Hood, because she's the one who's going to give you that guidance. That's usually around 6 p.m. Eastern. We'll be waiting closely for that. But if you look at these three big segments, remember, Microsoft has revenue and productivity and business processes. That was $18.6 billion, up 13%. With under that, you see Office 365 commercial revenue. That was growth of 18%. LinkedIn revenue up 8%. Dynamics up 22%. That's where they compete with Mark Benioff and his team at Salesforce. Then you have the revenue and intelligent cloud segment. That was up 19%. If you look under the hood of that segment, that's where they keep Azure. And you can see Azure and other cloud services revenue growth of 29%. Big question on the call is going to be not only what cloud consumption was like in this quarter, but what do Satya Nadella and Amy Hood see for cloud consumption in the quarters ahead. Finally, that third segment, revenue and more personal computing, that was up 3%. If you look under there, you can see Xbox content and services revenue increased 13%. And to your point, Julie, Microsoft just announcing that closing of Activision, and investors and analysts want to know how is that going to boost that gaming business in the quarters and years ahead.
Yeah, and I just want to pick up on the commentary from Microsoft as well, because it speaks to the AI theme that we've been talking about. Satya Nadella in the statement saying, with co-pilots, we are making the age of AI real for people and businesses everywhere, rapidly infusing AI across every layer of the tech stack and for every role and business process to drive productivity gains for our customers. So if you thought that the AI hype cycle was in a different phase, we're not quite there yet. There's still a lot of talk about that right at the top of the release. That is the first thing that Satya Nadella is saying, which I think sends a message still that the company is remaining very focused on this.
Yeah, they have been plowing an incredible amount of time, effort, and money into this technology. They think the $10 billion they put to work in OpenAI and the way they're now integrating this technology across a range of products and services, it is a big bet that Satya Nadella is making. And let's look at this reaction right here, at least initially after hours. Again, we don't have guidance yet from the CFO, but that's a big pop, nearly 5% here in the after hours.
Yeah, a big pop for a big company, right? Yep. Let's get to Alphabet here and what this company is saying as well. That's the other big report here. $64.05 billion in revenue as we ex-TAC, ex-traffic acquisition costs. As we told you, that's versus the $63.04 billion that analysts were estimating. However, cloud revenue missing estimates here. Google cloud revenue at $8.41 billion. $8.61 billion is what analysts had been anticipating. Why is this important? It looks like that analysts had been looking for a re-acceleration of growth in the cloud business, and they're not necessarily getting it. Now remember, just to give some perspective here on what the company's been seeing in cloud revenue growth previously, right? In the third quarter of 2022, it saw almost 38% growth in that, but then there was slowing, 32%, 28%, and then 28%. So when you're looking now at this $8.41 billion, I got to do the math here, but we're looking more in the sort of below 25% range here. That's not a reacceleration.
Yeah, and I'm looking at, and you look at Google Cloud, also breaking out operating income. It looks like $266 million in the quarter. But listen, they've got big competition, including, we were just talking about Microsoft's Azure and of course Amazon's AWS. They have all been kind of integrating generative AI tools, and we know that Google, for example, is looking for those tools to help boost that cloud computing business. So it's going to be interesting on the call to listen to Ruth Porat, the CFO, talk about just the different puts and takes she's seeing in that business. Yeah. As you mentioned earlier, I think that's another very interesting to talk about, is the changes in the C-suite. Ruth Porat is transitioning to a different role here as Chief Investment Officer. So I know, and listen, very well-respected analyst on the street, thinks well of her, investors think well of her. Now they want to know who's going to sit in that big chair next. I would also just take a beeline to Google advertising. It looks like that's coming in at $59.65 billion. There were analysts thinking that was going to be a good number because they were thinking, listen, they were expecting some modest recovery in online advertising. They were pointing out Google was lapping some relatively easier comps. So again, we're hoping for some color on that as well.
Yeah, most definitely. And by the way, Ruth Porat is CFO for now still. In addition to the other new roles she's taken on, she says she's going to stay in that role until they find someone to replace her. Much like we heard from Satya Nadella over at Microsoft, Sundar Pichai of Alphabet putting the AI commentary first, front and center, up at the top of the release, saying, I'm pleased with our results and our product momentum with AI-driven innovations across search, YouTube, cloud, our Pixel devices, and more. We're continuing to focus on making AI more helpful for everyone. So again, that AI emphasis. A couple of other lines of sales here that I just wanted to mention for Alphabet. YouTube ad revenue, $7.95 billion. That is ahead of estimates. Services revenue, Google services revenue, at nearly $68 billion, ahead of estimates. And the overall ad revenue, which you mentioned here, $59.65 billion, that's ahead of estimates. So it seems like the decline in the shares here, as far as I can tell, yes, operating income was a little bit light, but it seems like the cloud is really the biggest area of disappointment here and the reason that the shares are down.
Yeah, we got some great analysts coming up to talk, really run through all these numbers with us. So come on, we're going to break these earnings from Snap as well, another big name on tap, get in-depth analysis of Alphabet and Microsoft's numbers. That is after the break.
The tech earnings parade continues with Snap. The shares surging almost 14% after reporting an unexpected advance in sales. Analysts had been projecting a revenue drop of 2%. Instead, Snap said sales rose by 5.4% to $1.19 billion. The company also reporting, as you can see, a smaller loss than estimated and positive EBITDA on an adjusted basis of $40.1 million. Analysts had been projecting a loss on that basis at $64.2 million. So it looks like the ad business is improving for the company, and so that helped fuel the numbers there. In addition to that, a couple of other things to note. First of all, the company authorizing an up to $500 million buyback. It looks like that replaces the previous authorization, which they made last October. They're also announcing that their COO, Chief Operating Officer Jerry Hunter, is going to be retiring from the company. He's been there for 7 years. And finally, the company coming out with fourth quarter projections here, pretty much in line with estimates. Adjusted EBITDA going to be $65 million to $105 million. The average analyst estimate was around 100.6, so falling in between there. Fourth quarter revenue of $1.32 billion to $1.38 billion. That's what Snap is projecting.
Yeah, so at least the initial reaction here, investors like what they hear. That is a big move in the after hours. We're about 13% now. A few quick questions I have is, one is I'm very interested to hear more about engagement. What is user engagement like on the app right now? How much time are they spending in there? Critical for advertisers, of course. I'm interested to hear more about Snapchat Plus, their subscription service, just any more color we can get about how that's performing. And Julie, just, as we were talking about earlier, they've been out in front when it comes to AR for a long time. Of course, Apple's there too, Meta's there too. How excited should Snap investors still be about any moves they're making in that arena?
Yeah, and one more note here as well. Daily active users, according to Snap, 406 million in the third quarter. That's a boost of 12% year over year. And the company says in the fourth quarter, they assume DAUs will reach 410 to 412 million total subscribers. So that's what their financial assumptions are based on, that kind of user growth. So all of this said, let's figure out how to put it all together and what people should be doing with the stock here. Let's dig into not just Snap, but Alphabet as well. Rohit Kulkarni is here with us now, Managing Director and Senior Analyst at Roth MKM Capital Partners. Good to see you, Rohit. So let's start with Snap, since we were just talking about it here. It has had 5 stinker quarters in a row in terms of the stock reaction. Some relief here. What do you think is going right? Is this a turning point for Snap?
This is exactly what this is. This is a relief that Snap isn't disappearing. Okay, that was a bad pun, but I think Snap is showing some level of resiliency, and also they probably have a little bit of extra macro tailwind helping them right now. So if you take that together, Snap has been in a whole lot of hurt since Apple changes. They have gone through a significant exec reshuffle. Jerry Hunter leaving is also another reshuffle. So almost everybody reporting to the CEO except the CFO, I think we have new people in there. So this is almost like a reborn new company that is on the cusp of a turnaround. We see that macro, no longer a headwind, is probably a good sign of relief. So we aren't jumping here into the water with Snap, but I think water is getting a little bit warmer, I would say that way.
And Rohit, I think, correct me if I'm wrong, but I think you've got a neutral on this stock. What would you have to see, Rohit, to move you off the sidelines? What do you have to see to move to a buy to get more excited? What are you looking for?
Hey, look, again, simple blocking and tackling. I think this company has revenue growth rates significantly below their larger peers. Market is growing probably 10%. Look at what Google is growing at, and maybe Facebook is going to grow 20% or higher. So Snap growing at 3% and market cheering isn't something that is exciting from a stock picking perspective for me. Plus, they are in this transition of executives, which I would give the new executives probably 3-6 months for them to settle down and figure out their real strategy and execute left foot, right foot in that way. So those are the basic revenue growth acceleration and stable margins. Last 6-9 months, we haven't seen that. I think Q4 guidance is the first step towards that. If we see one more quarter like Q4, probably that's when we see execution is back in Snap, and now they're actually acting like an adult company.
Actually acting like an adult company. And maybe the street agrees with you in terms of lack of really runaway enthusiasm here, because the shares, which immediately went up a lot, still up a lot, but that gain is fading a little bit. Let's turn to then another company that you cover. That is Alphabet, which also just came out with these numbers. And it looks to be sinking because of the cloud revenue, specifically missing estimates. How big of a disappointment is that?
In my opinion, I think shares of Google down 5% on cloud miss while search and YouTube are above expectations is a bit of a exaggeration. Down 2% would be an okay after hours reaction, and I would expect shares to regain some of the lost ground as the night progresses, as the day progresses tomorrow, is what I feel as a first pass. I think they check the boxes on YouTube, they check the boxes on search, margins are better, hiring is slower, cloud is kind of on the margin an expectations game versus Microsoft versus Amazon. They're still growing faster, so I would say this is a lot of positives with a slight yellow flag.
And Rohit, listen, obviously there's been a boom of interest in AI, and Google has putting a lot of time and energy into that technology, and they've got the cash and some of the smartest engineers on the planet. Do you see them, Rohit, as a key beneficiary of AI in the quarters and years ahead?
I think so. As in, if you look at in Silicon Valley, Google is kind of considered as almost like a godfather of AI. They started AI before even OpenAI came about. That's how I would put it. And I think they just lost the mojo with AI earlier this year, and they've started to regain some of it back as they're showing products, direct-to-consumer offerings that, and they're still in search of that killer AI app, in my opinion, outside of the chat that ChatGPT is showing or showcasing everyone. Regardless, next year I feel they have real catalysts. They have the multimodal model called as Gemini coming up. They have a lot of new products recently launched that haven't yet demonstrated the adoption that they can have. So I feel Google is in the right spot with the right message, with the right set of products and capabilities as far as AI is concerned. I think that and has the best catalysts ahead as compared to even some of the other mega caps as far as AI deliverables are there out there.
Let's talk about the team as well, because as we talked about, Ruth Porat is transitioning into a new role at the company, but she still has the CFO role until they find a new person. How urgent do you think then is the need to find that person?
I think the biggest signaling that Google can do with regards to the new cost structure that everyone that they have promised investors over the last 12 months, that they are going to transition into a cost structure that is going to show leverage quarter on quarter. We haven't yet seen that. To some extent, Amazon and Facebook have tried to demonstrate that cost structure, but Google is yet kind of lagging. And I think this transition around what Ruth Porat is trying to achieve is probably going to be a catalyst for come next year. If you're talking about upside to Google shares, maybe we are going to find a couple of surprises on margins that, hey, Google can actually deliver leverage at the scale that they should have given. And now, with the transition away from Ruth, we are going to start to see that. So that's the signaling a new CFO could start to do in first half of next year. And the sooner they get somebody in that seat, the sooner that can happen.
And Rohit, when you look at Google's results here, is there a read-through for you, Rohit, to what we're going to hear from Meta tomorrow when they're scheduled to report?
I think what I see from advertising upside, even not just from Alphabet, but also from a smaller company like Snapchat, they are showing kind of upside to revenues above and beyond what Street was modeling as far as advertising dollars are concerned. So what we are seeing from both Alphabet and Snap today bodes very positively for Meta and the rest of the ad ecosystem in the next couple of weeks.
There's something else that Alphabet and Meta currently have in common, and that's regulatory scrutiny. We just heard about a new raft of lawsuits from attorneys general around the United States today. Of course, Alphabet/Google's under Department of Justice scrutiny. This is something that these companies have largely been able to shrug off from a stock perspective. Do investors need to be worried about these issues at all?
In my opinion, so each issue is a different issue and has a different range of outcomes, in my opinion, and different range of ways to mitigate those outcomes or handicap the outcomes from an investor's perspective. Having said that, the most imminent one that is going on right now in the courts is we are entering the second month of the monopoly trial versus Google. I think so far, if you look at what the stock trend has been, I think investors have decided to skirt away one of the biggest antitrust trials of our generation. So fast forward that 6 months, probably we are not going to see significant handicapping right now. But again, probably that stays as a dark cloud in a distant future if there is some compliance or extra slap on the wrist that these companies would need to have. But right now, next 3 to 6 months, I think it's absolutely clear sailing from a regulatory standpoint, in my opinion.
Okay. Rohit Kulkarni, Managing Director and Senior Analyst at Roth Capital Partners. Thank you so much, Rohit.
Thank you.
Let's do another big mover in the after hours here. Microsoft shares jumping on that first quarter earnings print. And joining us now to discuss the latest results is Ted Mortensen, Bayer Technology Desk sector strategist. So let me start with this, just your reaction to the print here. We got the stock moving more than 4% in the after hours.
Yeah, it should be. I mean, this is a really strong print on multiple levels. I mean, if you look at the revenues, a good close to $2 billion of exceed. You look at that operating margin leverage up 24%, and obviously they blew out the EPS. I think from the segments, what's really interesting, productivity and business was basically, I would say, in line, but Dynamics was very, very strong, up 21% in constant currency. The other things that really popped for me personally, and I think for our tech team in general, is if you look at that intelligent cloud number, it's up 19%, and Azure, they guided roughly 25 to 26%. For Q1, it was up 28%. So that really represents how Microsoft is leveraging on multiple levels that cloud revenue. And I think the other big surprise, and we've known that PCs are coming off the bottom, but that personal computing segment at $13.7 billion is also a pretty nice beat.
Hey, Ted, it's Julie here. When we talk about Azure in particular, and I know that you focus more on Microsoft than on Alphabet. When you look, though, at Azure's growth in comparison with Google Cloud's growth, what does it tell you about what Microsoft is doing in terms of market share?
I think Microsoft controls the enterprise, and I think this is something that your viewership really has to understand. They've got they're almost a line item in some Fortune 500 IT budgets. So that control of the enterprise and that hooks into the Fortune 500 is very, very important. And more importantly, I think as you look forward, they're rolling out almost 11 Copilot offerings going forward. And that's major uplift for Microsoft from an enterprise perspective as they roll out those products.
And Ted, what do you expect for Azure now in the quarters ahead? We're waiting for CFO Amy Hood to give us her forecast, her guidance. What's your take? Do you think the strength continues here?
Well, we've been in this realm of what's called optimization, and it seems like they've broken out of that. If you look at their cloud growth in Q2 of 23, they had 38% growth. Then in Q3, that went to 31. Last quarter, it was 27. And now we're back up to 28, where they guided 25 to 26. That's a pretty good uptick. And I think what it demonstrates is that Microsoft's vision from a management perspective, also from a scale perspective and a free cash flow perspective. And, again, they've spent almost $13 billion on OpenAI, and this week also invested almost $3.2 billion in Australian generative AI infrastructure. This is kind of the Death Star of technology. They are operating on all cylinders, and quite frankly, they're swimming out of their lanes, their traditional lanes. So It's a really impressive product set that will leverage Azure growth going forward. So I think what the street's going to look at, in summary, is we may be at least breaking out of that optimization or that cost rationalization phase and actually investing in core generative AI.
Well, and Ted, I mean, obviously we're going to look for more color on the call, but how should investors be thinking about how much AI is playing into all of the elements that you're talking about, right? In terms of the growth of cloud, in terms of the growth of Windows with some of the enhanced, capability. How much is AI playing a role and generative AI playing a role in all of that?
We're in the first inning of this, maybe not even in the first inning, where the ground crew has not even got to the baseball stadium yet. If you look at what's happening around Microsoft, there are pilots going on, and these pilots are very, very singular in nature. And then we have trials starting in 24, 25. Microsoft is changing the rules of the game on generative AI. So on the conference call, what's going to be very important is what Satya or even Amy Hood says, the CFO says, on E3 and E5 product uptake on an ASP. Are the Fortune 500 actually willing to pay up for this generative AI services? And we'll have to wait and see what they say on the conference call.
And Ted, I want to get you out of here on this. You know, Microsoft did say they closed that acquisition of Activision. That means strong IP content. That means strength in mobile gaming with Candy Crush. What does that acquisition, Ted, really mean for Microsoft's gaming business now going forward?
So if you listen to NVIDIA or you listen to Microsoft, we're not going to see a console cycle here in the next few years. This is all moving to the cloud. And Microsoft already had close to 500 million MAUs on the cloud side. So what Activision really represents is accretion to the model, number one. And number two, this leverage, another leverage point into Azure growth, and that's cloud loadings.
Ted Mortensen, thank you so much for joining us today, Ted. That was great insight.
Okay, take care.
And coming up, Republicans' third nominee for Speaker, Majority Whip Tom Emmer, has reportedly dropped out of the race. What's next for the GOP and its fight for leadership? We're going to break it down after this break. Hard to believe, but even more chaos on Capitol Hill. Congressman Tom Emmer reportedly is out as the Republican nominee for House Speaker. That is just hours after securing the nomination. Yahoo Finance's Rick Newman has the latest for us. Rick.
Hey guys, I have a new idea. I'm just going to record a segment that says, the latest Republican nominee for Speaker of the House has flamed out. You guys can just run the same. You just run that same clip every day. You can change the name. Maybe they're just going to go through every single one of the 222 Republicans. Maybe everybody's going to get to be the Speaker nominee for a day. They'll flame out. It'll be like everybody. Everybody gets a participation award. What can I say? I mean, they cannot elect anybody. I mean, you really have to. Start to think that there's not a single Republican among the 222 who could get the votes to become Speaker. And we now know what the essential problem is. The moderates won't vote for the conservatives, and the conservatives won't vote for the moderates. This particular case, Donald Trump weighed in to say, no, don't go for Emmer. Remember, Emmer was one of the ones who did vote to certify Joe Biden's election in 2020. So I guess one of the requirements for the job is that you have to be an election denier in order to get Donald Trump's endorsement. But if you don't get Donald Trump's endorsement, you can't get this job. So none of the political analysts have a clue where this is going. I mean, we can speculate about what we've talked about before, which is that Patrick McHenry, the guy with the bow tie, that he becomes the formal or the permanent Speaker pro tem. Sorry for the contradiction in terms there. And that would allow the House to vote on necessary legislation. Democrats would have to go along with that. That might be a fine outcome because Congress would at least be able to get something done. But Republicans also seem like they're going to hold out against that option for as long as possible. So round and round we go.
Rick, what about, I know we're just like spinning our wheels here. What about somebody who's not in Congress, right? Because there's been that idea floated that it doesn't, the Speaker of the House can technically be somebody who's not serving in Congress right now. But is there any chance of that happening?
I mean, we are all grasping at straws, right? From what I understand, one of the rules is you cannot be under federal indictment and be nominated for the job. So that rules out Donald Trump. And he doesn't want the job anyway. He just wants to ruin it for somebody else. No, I mean, whoever the nominee is, I mean, it's sort of like the unstoppable fool has met the immovable idiot. You cannot get conservatives to approve a moderate, and you cannot get moderates to approve a conservative. And it seems to me that's whether it's inside or outside of the House. I mean, it really seems plausible that Republicans are not going to be able to find anybody who they can elect for the next, I mean, what do we have? Another 15 months until we will get a new Congress in 2025. I guess the one thing that might force the issue is some kind of crisis. Perhaps this legislation coming down the road, funding for Israel and for Ukraine, maybe that could be some kind of trigger that would force somebody to make a compromise here. But I mean, this is really like tribal warfare, where you've got one clan aggrieved against another, and neither side is going to give in. And there's no peacemaker. There is no peacemaking force here. Democrats, shrewdly, they're not going to intervene and try to help the Republicans. They think they're benefiting from all this. So no, there's nobody who can materialize as a peacemaker here. I just, like everybody else, I don't have an answer for how this ends.
One we're going to keep watching. Rick Newman, thank you so much for joining us today, my friend.
You guys.
And coming up, we're going to go around the horn with today's top stories, including the delay of the newest Mission Impossible film. That's next.
Welcome back to Yahoo Finance. Josh Schaefer here with Alexandra Canal and Pras Subramanian. We're talking about some stories that caught our eyes today. And Pras, I know you just could not get enough of Spotify earnings. I'm assuming you're a power user.
Mm-hmm.
I am.
Premium? Are you a premium subscriber?
I am. My good friend Miles Ludland, I think, bought the IPO and lost money on that. But anyway, I was surprised to see, by the way, that surprise. Spotify with a surprise profit as well today, beating here on a net basis here, 65 million euros net profit. Analysts expecting a loss, I believe. Gross margins of 26.4%, very healthy there. They're raising prices, cutting services like podcasting that weren't doing so well, sort of optimizing the business. And maybe we're seeing the difference here. And I got to ask, I mean, Ali, like, are we kind of seeing a turning point here for Spotify? Have they sort of solved their problem with steep losses for quarters on quarters?
Management certainly seems to think so. On the earnings call, CFO Paul Vogel said that this was an inflection point. The fact that we are now making money again. We are a profitable business again. This is something that investors have really been wanting to see for some time. And there's been a lot of patience on the part of investors. Analysts have really preached the long game. We were just showing margins on the screen. Margins have been a metric that investors have been very hyper focused on. We really haven't seen margins above that 25%. This quarter, we got 26.4% above estimates, and they did guide to higher gross margins in the fourth quarter at 26.6%. So it seems like they're firing on all cylinders. They are making significant cuts. They laid off a bunch of employees earlier in this year. They're trimming their podcast division. They're leaning on podcasts. They are committed to making this a good business, not just a good product. That was a phrase that was repeated on the earnings call.
Yeah, I mean, I think if you take a look at the max chart or a 5-year chart of Spotify and they call something an inflection point, part of you just wants to say, okay, well, now you have to prove it, right?
Right.
Because they did spend a lot on that podcast unit and a lot on building out personal
$1 billion.
content. And there were definitely some issues with how much they spent there and sort of the return on investment. But the one thing that excites me about Spotify and when they're talking about price hikes, we've talked about the price hikes from different streamers. We were talking about Netflix last week. This is the one streamer that I feel like they could be bumping up prices, and I keep paying. Because there's no other competition other than Apple Music, right? Like, there's not a lot of competition. You either have Apple Music, in my opinion, or you have Spotify, or you don't have any of them. But those are your two main competitors, and it's gonna take a lot for me to move off of Spotify.
And pricing, you bring up a good point, because they did recently raise prices. They went into effect at the end of the third quarter, but we did see that help with margins. We did see that help with the bottom line growth there. And I think we're going to continue to see that help in the quarters to come.
Bump it up. $16.99 isn't enough. You can charge me $20.
They've been very strategic about their pricing. And it seems like they don't want to rush the pricing story. They want to really see what the reaction is, because they keep adding subscribers. I mean, quarter after quarter, more than 20 million monthly active users. That is insane amount of growth for a company that has been around for a very long time, and they want to make sure that there is no churn there, because that is what's going to spook investors. So they need to be careful on when and how much that they can price their service. But I agree, I do think they have pricing power.
Two things I want to say. I want to add the other, I think, competitor to Spotify and Apple Music is YouTube. A lot of people use YouTube as like their DJ. So, but this is this quarter today is reminding me of when Netflix finally turned the corner. They had years of negative profits, right? Then they finally got profits a few years ago, and then it just sort of took off from there. Could we see potentially Spotify now taking off? As an investor, that's a nice story to hear.
I think that's a great point. And if you look at Netflix right now, it's the only profitable streaming service on the market. Their free cash flow is super impressive. Spotify, too, reported well over 200 million euros in free cash flow. They have a lot of cash on hand. They had 9 million euros in free cash flow in the previous quarter. So they have a lot of cash on hand, and there's a lot of room to run there. So definitely a stock to watch. Miles Undlin, he might need to get back in there and buy right now. But although Spotify, one story.
He was early.
He was early. One story in the Hollywood picture that's doing well. Not all of Hollywood is doing well, and we still have the ongoing actor strike. SAG-AFTRA, which is the union that represents those actors, restarted negotiations with studios today. But also today, we got the news that Mission Impossible is delaying their release from June of 2024 to May of 2025, which is just insane. Over like a year later, we're going to see this movie. I'm a big fan of the Mission Impossible franchise, so I was really bummed to see
Isn't
the
there
delay.
like 5 other ones that they can just put on replay instead?
This one's supposed to be so good.
Can't they just play one of the old ones and everyone will go see it again?
I know you're not a fan of the Mission Impossible movies, but I find them very entertaining, and it's interesting to see how we did see some movies like Dune sequel, for example, get pushed from 2023 into 2024. But now this strike is starting to impact the 2024 slate.
From a consumer standpoint, the writer's strike and what I was missing out on, I was really sad about new content, like true new content, a new series,
Like
a new
TV
movie I hadn't thought of before coming out. Not necessarily, the 5th movie in a series. I just
There's
don't
a
think it
reason
really hits home for me,
these movies do well.
I mean, it's just reminding me of past strikes and seeing how they push these things back years on end. We've seen that before with other franchise movies and stuff like that. But also kind of makes me think about what we heard before with the writer's strike, was where you have smaller production houses like A24, for instance, that will say, you know what, we'll pay you what you want, just work and get a waiver from the union. Maybe we'll potentially see some smaller, like the A24s of the world, saying, actors will give what you want. Come on set, we'll get a waiver from the union, have them come and do some movies, get some prestige, smaller movies up there, because, like you said, we were just talking about Oscar season's almost here.
Yeah, Oscar season is almost here, and a big part of this is actors going to go out and promote their own movies, promote their own stuff. They're not able to do this amid the strike, and how is that going to impact, Oscar season and the box office down the line?
Mission Impossible, huh? Have you ever tried to sit in a cold tub of 48-degree water for 10 or 15 minutes and host a business meeting? A great story out in the Wall Street Journal today talking about the cold plunge sort of fad, I guess. I'm going to call it a fad for now. We'll see if it sticks.
Yeah, I would say it's a trend,
That's been happening, a trend that's been
Wellness
happening
trend.
of people wanting to do this. Of course, there are plenty of benefits out there that are listed for how it can benefit your mental health. It can bring some focus to you. But the theory is you go in a very cold tub of water and just sit there and take it in and sort of rebalance. And the story in the Journal today was talking about how some entrepreneurs are saying it's a great place to host a business meeting because you're centered. Pras, you look like you have thoughts.
I do.
Should we be doing this in a cold tub right now?
So this is kind of like reminding me of the different past trends that business guys would do, right? So it was golf for many years, right? Then it became like more adventure or high energy things like cycling.
That's a really good
rock
point.
climbing.
Yeah.
People were doing deals like in these activities, especially Silicon Valley. Cycling is huge. Now, of course, longevity is all the rage. Cold plunge, reset the system. It's like basically a software update. You sit in there, you get out, you're all energized, and everything's kind of like inflammation goes down. It's such a valley thing, in my opinion.
Yeah.
I wonder if it's going to kind of resonate out here. I think it's all California. That's all. I'm into it. I'll try it out, but.
I don't know. I feel like there's a lot more research out there about cold plunging and the benefits of it, and you see it all over TikTok. You see it on social media, and I do the cold shower. I'll do like the 15 seconds at the end. Yeah. I don't know if I've ever done the full plunge, but
the funny thing, Frost, when you're bringing up those different trends and sort of like what the CEOs want to do, and when you listen to some self-help podcasts where they're going to tell you to do as well, we're kind of going against all the benefits of it, though, right? You're supposed to golf so you don't think about work. You're supposed to go cycling so you do physical activity and don't think about work. You're supposed to cold plunge because when you're in 48-degree water and it's up to your neck, you can't think about anything else, so you sort of release some anxiety. You're not supposed to host a business meeting.
Maybe that's the point,
though. It's the opposite.
Maybe for those 5 minutes, you're not thinking about it, and then when you emerge, you're a new person with new ideas. And
but they're saying to hold the business meeting in there. That was part of the story.
But like maybe that's what we all need, just like a pause. And then a rebirth in a way. I don't know.
I like how you slowed us down there.
Yeah,
I'm ready for my plunge. I think we got to go plunge.
A refreshing pause and come on. Hey, I think I know how to raise those margins now. Anyway, that's enough. We're going to go take a plunge over this. More Yahoo Finance after the break.
to bring you some of the movers that we are watching in the after hours based on, in many cases, earnings here. Let's start with Visa. That company just out, the largest payments network in the world, came out with numbers that beat analyst estimates. Fourth quarter adjusted earnings per share, $2.33. That's versus the $2.24 that was estimated here. And payments volume was up by nearly 9% to $3.2 trillion. The company talking in its release about what drove it there. Basically, the CEO, Ryan McInerney, saying that the recovery in cross-border travel has been helpful to Visa, as well as resilient consumer spending. And he says the company will continue to benefit from some of these moves next year. You can see the shares up about 1% in after-hours trading. We are also watching shares of Texas Instruments. They are down 4.5% in after-hours trading. The largest maker of analog semiconductors, which are used in a raft of different types of industries, came out with a forecast for revenue that was below analyst estimates. The company says at most it's going to have $4.27 billion in revenue in the fourth quarter. Analysts have been looking for $4.49 billion. So really it's the outlook that is weighing on those shares here. The company said its automotive business was a standout, but industrial weakness broadened, according to the CEO in a statement here. So going to keep watching those TI shares. And by the way, for the year, revenue is forecast to drop about 10%, according to analysts. That's after 3 years of sales growth for the company. And then finally, we are also looking at shares of SunPower in after-hours trading, down by some 9% after the company said it is going to restate financial statements for 2022 and for the first 2 quarters of 2023. Basically, it seems to be an inventory misstatement issue here, that some of its inventory of certain components was overstated by $16 to $20 million. That means some revenue was understated. So that would seem to imply that maybe they're going to have revenue go higher as a result of all this. But typically, the street does not like to see mistakes made in financial statements. And that's why you've got that stock down some 10% for the year. The stock is down some 72%, reflecting some difficulties that we have seen broadly for the solar power industry, Josh.
Yikes with that move. It's closing time here at Yahoo Finance. Here's a look at some of the top stories of the day. Let's start with Meta, facing more lawsuits from 42 attorneys general. This is a bipartisan group targeting the social media giant, alleging Facebook and Instagram are addictive and targeting kids. It's not the first time a broad coalition of state attorneys general have teamed up to go after Meta. In 2020, remember, 48 states and territories sued the company on antitrust grounds. Meanwhile, Anheuser-Busch reportedly securing a major sponsorship deal with the UFC. The Brewers brands, including Bud Light, will replace Modelo, which has overtaken Bud Light as the top beer in America. The multi-year global agreement is set to begin in January, according to Bloomberg. And Bitcoin climbing above 35,000 earlier. Optimism over a spot Bitcoin ETF driving those gains, and the moves also driving shares of Coinbase sharply higher on the day.
And here's what to watch tomorrow. Even more tech earnings. Meta and IBM are set to report their numbers. Meta, the third of tech's so-called Magnificent Seven, reporting results this week, and the stock is the second best performer on the S&P 500 so far this year. Analysts will be looking to see if the company is reaping the rewards of Meta's investment into AI chatbot Llama 2. Ahead of the open, we're going to get earnings from Boeing. The stock has taken a hit after it halted 737 MAX deliveries after the discovery of a problem with compliance of its parts. Other earnings on deck include, but are not limited to, T-Mobile, Hilton, and Mattel, the owner of Barbie. We expect to see sales go up after this summer's blockbuster movie. Guess what? It's not just earnings. We've got economic data, too. We're going to get the latest in new home sales for September. The numbers are expected to be slightly up compared with August figure, coming in at 684,000 month over month. In other words, it's going to be really busy tomorrow, and we're going to bring you all of that information. But for now, it does it for today's Yahoo Finance Live. Join us back here again at 3 p.m. tomorrow.